Hi, Traders Coach here at TradeGateHub.com. Invite you to join us on our platform to share your looks, your analysis, also to have access to our analysis outside of our live streams. So go to www.tradegate.hub, TradeGateHub.com to log in and become part of our community. So today kind of had a double whammy of economic data. That's why copper is sharply lower. China being a major copper producer, you're getting almost a 10-cent hit in copper today. Here's your copper chart. Looks like it could be failing. Also on top of it, weaker than expected ADP numbers here in the US, and all of that combining to pressure the dollar, which is still trading according to my narrative from the high here and then the retest of the breakdown here, and we're getting follow through now. Euro challenging the 1850 level again, looking pretty strong. You guys know, if you've been following my videos, I think that there's a chance for us to make a move up towards 119.5, maybe 120. Yeah, you could throw your charts away Friday morning for a little bit, but dollar looking pretty negative. We had a very big reversal in the yen from where we were earlier in the day. Here it is. We had a big rally going into today's US session and gave it all back with weakness on the ADP. So you also see sharply lower oil. So what does this mean when you put it all together? Lower copper, lower oil, lower dollar. It means that there's some economic weakness globally, at least, and most likely also here in the US. So, this is kind of a Goldilocks scenario for the Fed, that they don't have to start their taper. In fact, the 10-year yield is lower. Doesn't look like it's going to explode unless we get back over 136, and this is a range for your 10-year note. 120's got to hold, or we're going to make new lows, and we have a breakout over 136. Perhaps we resolve this on Friday on the NFP. But Euro acting good, and cable getting a nice pop. It's as strong, a little stronger than the euro today, as expressed in euro pound, which is kind of flat, but still looks good to me as long as we're holding this 85.40 level. The yen, I think this is pretty important. If we get some follow through, that perhaps we could head back down towards this 107 level. You could short it again with stops over the high of the move, but as I was saying, and that's why I break out my telescope, the weekly candle last week in the yen was this one. And despite dollar weakness, the yen was still steady on the week, whereas last week in the dollar, you had this negative candle, and we're getting follow through to the downside. If you've been following me for the last couple of weeks since the dollar high, I am looking for the 91 area to end up being a target. We'll see. Right now, it was right for both long-term dollar bears and even short-term, long-term dollar bulls not to be long the dollar after this, and we'll see what happens down here at this 90.80 level. I think that's going to be a battleground for long-term dollar bears and dollar bulls to fight it out down here. So we could still be a week or two away from it, and things could change after the NFP on Friday. You're getting a pop in gold, which is, it really works with a lower yen. If we're going to get a lower yen, we should get some continuation move in the gold when you look at it even short term. Here's a 1 hour. Let's see what it does at new highs and see if it could confirm, maybe up around the 1830 level. You go out to the 2 hour, and it looks like we could have a divergence and a third drive up here. I'm not long-term bearish of gold, but I have been talking about 1830, and from there that perhaps we could end up having some type of pullback in the gold for better entries down here around 1760 to 40. So the next trade may be counter trend short in the gold. Silver acting good too. You know, anything that's intrinsic uh, or related to the dollar is acting good. It's you see the difference between what's happening to economically sensitive commodities like oil, like copper, and monetary metals, okay, gold and silver, which even though there are industrial uses in silver and some in gold, they're acting more like a dollar hedge than oil and copper and other commodities that take demand, uh, global demand, to energize the price to the upside. Taking a look at the S&Ps yesterday, I talked about a potential reversal. We did. It was a nice day trade from the highs. And right now we have a failing rally happening here in the S&Ps. We tried to make a new high up at 40, and it looks like we're failing. Your first sign that something is a problem. Well, this was your first sign that yesterday um, at new highs, the glaring divergence on the daily. We didn't make a new high. It's a failing rally, but yesterday's low is important, 45.15, taking that out. And I'm sure people are going to keep trying to buy the dips all the way down to, dare I say it, 3,200. So I know it's a very contrarian call, but I think there's a chance, especially if we start taking out 42 and a half, that there could be a pretty big bear move. You know, there was a time, and I want to just bring this up, and I want to say that the market can't have it both ways. And if you remember the Great Recession, that was blown up by the housing market derivatives, mainly in the developed world. China really didn't get that hurt, although, you know, some of the demand for their products dropped off during the Great Recession, but they weren't hurt, and they were the first ones to come out of it. And back then, economists were saying that China's strength can take us out of this Great Recession, and you can't have it both ways. So we're getting a lot of Chinese weakness. We're getting a lot of draconian regulatory action on certain equities, and China wants to tamp down on commodity prices. And you know, if you've been following what the Chinese do in the market when they're talking markets down, it's so they could buy them cheaper. And if they're talking markets up, it's so they could distribute it. So they want to take the commodity markets down so they could reaccumulate. It's also known that China holds over 50% of the harvested above ground grain supply. So they see something. So keep an eye on the grains. You want to own what China owns. They were the beginning of the bull market in gold. They were some of the biggest buyers. So looking at what's happening here in the Dixie, I'm still looking for lower levels at 91.40. What a dichotomy in the S&Ps being down. When's the last time you saw the S&Ps down and NASDAQ up 54? So I'm sure that's part of what's going on here is what's happening in. Let's take a look at some Apple's up big again today. Let's see if this is a new high. It is a new high. There's your daily. We are diverging at new highs. The wedge line comes in right around 55. We're almost there. Here's the 4-hour trying to blow out the divergence, but looks like a rising wedge to me. Let's take a look at Microsoft, which really was a star last week. Still can't seem to make a new high, at least not yet. Amazon's working its way back into the gap here. You know, the bid, this was earnings. And Google's still heading up, making new highs for the move. Hard to find a divergence anywhere in Google, except I just found one on the 2-hour. So definitely the strength is still the mega cap tech stocks. Here's Facebook and Netflix. And a quick look at the Dow with Dow still really lagging, hasn't made a new high since mid-August. We have this gap down. We'll see. I know some people looking for 35,950. We'll see if we get that. And I do want to cover a few other different indices. So here you go on the high yield debt, gap lower, but it's coming back. And the corporate debt is really looking weak to me. This is the biggest bubble that we have on the planet because corporate borrowing has been so huge over the last several years. And it's not a good sign that with the market making new high, that this is investment grade corporates. Okay, so this is not companies in trouble. These are the cream of the crop, and they're having a very difficult time getting back to the highs they made in August. I think that's something to have some concern over. And taking a look, I haven't looked at this for a while, but it's kind of a risk off type of currency. So peso under pressure with a weak dollar. Maybe we're going to wash out one more time in the Mexican peso. I want to remind everyone, especially with the kind of markets you're seeing now with everything going up, except for today, some of the economically sensitive commodities we're going to have with us. Henrik Zeberg, who is one of the few remaining deflationists out there, still feels there's going to be one big whiff of deflation before gold bottoms and silver bottoms. So stay tuned for that tomorrow. Commodity currencies up with the precious metals. Aussie acting like it wants to retrace maybe back towards this 75 level. This was important support. I'm not looking for a big bull move in foreign currencies. I'm considering this just a correction of the correction. And Dixie making new lows as we talk. And now you have S&Ps making new lows down 430 on the day. We'll see if we get any catch up in the NASDAQ, which still, because of lower rates are the friend to tech. Tech doesn't perform as well with higher rates. So getting a nice sell-off in S&Ps and NASDAQ trying to make a new high. We'll see if it's going to diverge. Maybe on the 2-hour it will diverge. I think it's going to have trouble up here at 15,900. 15,690 is a number that I've seen some other traders bandy about. So we're only 20 pips away from that. And here's that copper trying to hold. So the theme of a weaker dollar seems to be the way to go. The path of least resistance right now is a lower dollar. So, why don't we just take like kind of a big picture look at this and call it some type of head and shoulders pattern from here. Let's just put in a horizontal line. And this is how you can end up with those targets I talked about. So let's call this a neckline. So let's call it 92.50. 130 points from here is going to give you a 91.10. So I think you have to stay short the dollar. Maybe you pull your stops down. I'm also a believer, if you sold the dollar up here or on the Powell speech last Friday when it tested the breakdown, both were recommended suggestions, strategies. You can pull your stop down. At first it was above the high, then you trailed it to the 93.20 level. I think you can now trail it back above 80, which would lock in profits for you. Similar situation, if you bought the euro down here, I don't think we should now close back under the low that held on this pullback and this pullback. So 1780. Also take partials, even though there might be another 100 pips or so to the upside. So the dollar forecasting has been pretty good. just a quick review. We had this double top here that I didn't believe was going to hold. That was based upon here and here, said there'd be a stop hunt above it. And then we peaked with divergence, and this ended up being a false breakout. And then we tested the false breakout and tried to rally the dollar again, and it's failing at this moment while we're talking. And here we are down here. It's going to be a time to consider shorts across the board in the euro and cable. And maybe by then the yen is bottoming under 108. So that's a wrap for me today, everyone. Any questions before I go? Give me a why if you understand the analysis I've covered. Just a quick review. Dollar's still looking weak. Sell rips. I advise having very small or no positions on the release of the NFP because it's a roulette bet. It's binary. No one knows what the number is going to be or what the initial reaction will be. So instead of betting black or red, don't bet on the reaction, but react to the reaction. And above all, everyone, no matter what your interest is, stocks, commodities, currencies, don't just count your stock certificates or your gold bars or your euro dollars. Count your blessings, and I'll see you tomorrow. Tomorrow we have that interview, and I'm looking forward to speaking to Mr. Zeberg, Henrik Zeberg of the Zeberg Report. Tune in for that. Trade well, as Michael Venezia says in here, and he doesn't just say it, he does it. If you're a stock trader, you need to drop in and have Michael teach you his process every morning, what he goes through. Because let's face it, besides crypto, stocks are the hottest area out there, much hotter than currencies and commodities, at least for now. So everyone, good trading to you. And we'll see everyone tomorrow for a conversation with Henrik Zeberg. Adios, everyone.